Imagine vomiting blood, not a little bit. Blood that looks like coffee grounds, dark and thick, the kind that makes your stomach drop because you know something is seriously wrong. You rush to the emergency room, terrified, and after hours of tests and waiting and fear, the doctors tell you it's not life-threatening. You exhale, you feel relief wash over you. And then the bill arrives. Over $3,000, out of pocket, despite the fact that you pay $1,200 every single month for health insurance. That moment, that gut punch of staring at a massive medical bill after faithfully paying your premiums for years, is something millions of Americans experience every single day. And it raises a question that is completely reasonable, completely valid, and honestly, completely infuriating. What is the actual point of insurance if it doesn't protect you when you need it most? Today, we are diving deep into that question because the answer is more complicated than the insurance companies want you to know, and understanding it could save you thousands of dollars and a whole lot of heartache. So let's talk about the American healthcare insurance system for a second. Because to understand why moments like this happen, you need to understand the landscape people are navigating. Health insurance in the United States is not like insurance in most other developed countries. It is a layered, complicated, often deliberately confusing system built around multiple financial mechanisms that all have to be satisfied before the insurance company starts paying significant portions of your bills. You have your premium, which is the monthly amount you pay just to have the coverage, regardless of whether you use it or not. Then you have your deductible, which is the amount you have to pay out of pocket before insurance really kicks in. Then you have copays and coinsurance, which are the percentages you still owe even after your deductible is met. And then finally, there is your out-of-pocket maximum, which is the ceiling on how much you can be forced to pay in a given year before insurance covers 100%. Most people understand the premium. Very few people truly internalize what the deductible means in practice until they are staring down a terrifying medical event and a bill that reflects every single dollar of it. Now let's get into the story that sparked this video, because it perfectly illustrates exactly how this system works and why it feels so broken to the people living inside it. A parent, let's call them a working parent because that is exactly what they are, is enrolled in their employer's health insurance plan. They are covering themselves and their child. The monthly premium for this coverage is not cheap. After their employer pays their portion of the cost, which is a benefit that many employers provide, this person is still paying $1,200 a month out of their own paycheck. $1,200 every single month. That is $14,400 a year just in premiums alone. One night, something alarming happens. This parent starts vomiting blood that looks like coffee grounds. If you are not familiar with what that means medically, coffee ground vomiting is a sign of potential bleeding in the upper gastrointestinal tract. It can indicate ulcers, tears in the esophagus, or other serious conditions. It is not something you ignore. It is not something you sleep off and call your doctor about in the morning. It is an emergency, and this parent did exactly the right thing. They did not immediately rush to the ER, which is often the most expensive setting for care. They went to urgent care first. They followed the medical professional's advice there, and when that urgent care told them to go to the emergency room, they went. This was not someone being careless with the medical system. This was someone navigating it responsibly, step by step, doing everything right. They go to the ER, they get evaluated, tests are run, and here is the small mercy in this story. The condition turned out to not be life-threatening. It was still a medical emergency, it still required emergency care, but they were going to be okay. And then came the financial reality. A bill for over $3,000. Why $3,000? Because this parent had chosen the lowest deductible plan their employer offered. That deductible was $2,500 per person. So before insurance would begin covering the majority of costs, they had to satisfy that deductible. An ER visit, even for something that turned out to be not life-threatening, can easily generate bills that hit that threshold very quickly. Here is what makes this story especially painful and especially common. This parent looked at the other plan options available through their employer. The next plan up had a $4,000 deductible, and it was only about $120 less per month. Do the math on that. Saving $120 a month sounds nice until you realize your deductible just went up by $1,500. That is not a better deal. So this person had genuinely chosen the most financially rational option available to them, and they were still stuck with a bill that felt devastating. The edit they added to their post said it all. Yes, I know what my deductible is. I understand I have to pay for medical care. I am just venting. This is a lot of money. And that is the thing. This person was not confused about how insurance works. They were not naive. They were not asking for a lesson on deductibles. They were expressing something that millions of people feel, and very few spaces actually validate. The emotional weight of paying so much money every month for a system that still leaves you holding enormous bills during some of the worst moments of your life. So let's talk about what is actually happening here and what you can learn from it, because there are real things you can do to navigate this system better, even when the system itself is deeply flawed. First, understand the total cost of your health care, not just the premium. Most people choose their health insurance plan by looking at the monthly premium and picking the lowest number. That is completely understandable. But the true cost of your health care in any given year is your premium plus your potential out-of-pocket costs. If you are generally healthy and rarely use medical care, a high-deductible plan with a lower premium might actually save you money. But if you have a family, if you have any chronic conditions, or if you are the kind of person who, like most humans, occasionally has medical emergencies, you need to factor in what you could realistically be billed. Second, understand what an HSA is and use it if you have access to one. A health savings account is a tax-advantaged account you can contribute to if you have a qualifying high-deductible health plan. The money goes in pre-tax, grows tax-free, and comes out tax-free when used for qualified medical expenses. It is essentially the government's way of acknowledging that high-deductible plans shift enormous financial burden onto individuals and offering a small tool to manage it. If your plan qualifies, contribute to your HSA consistently, especially during healthy years, so you have a cushion when emergencies hit. Third, know that medical bills are often negotiable. This is one of the most underutilized pieces of financial knowledge in America. Hospitals, especially nonprofit hospitals, frequently have financial assistance programs. If you call the billing department, explain your situation, and ask about hardship programs or payment plans, you will often find that the number on that bill is not as fixed as it appears. Many hospitals will reduce bills significantly for patients who ask, and many are legally required to offer assistance to patients below certain income thresholds. Fourth, always get an itemized bill and review it for errors. Medical billing errors are astonishingly common. Studies suggest that the majority of hospital bills contain at least one error. Charges for services you did not receive, duplicate charges, incorrect codes that change what insurance covers. You have the right to an itemized bill, and you should always request one and review it carefully. Fifth, understand your explanation of benefits. When insurance processes a claim, they send you a document called an EOB, an explanation of benefits. This is not a bill. It shows you what was charged, what the insurance company paid, what adjustments were made, and what you owe. Reading this document carefully can help you catch errors before you pay anything. And finally, if you are feeling that rage, that deep frustration of doing everything right and still getting hit with bills that feel impossible, know that your anger is rational. The system is not designed around your well-being. It is designed around financial models that often prioritize insurer profit over patient protection. Advocating for yourself, staying informed, and using every tool available to you is not just helpful. In this system, it is survival. The parent in this story did so many things right. They went to urgent care first. They followed medical advice. They chose the most cost-effective plan available to them. They still ended up with a bill that could derail someone's finances. And they are far from alone. If this has ever happened to you, if you have sat in a hospital or an urgent care or a doctor's office And felt that sinking feeling when you realize your insurance is not going to save you from a massive bill, share this video. Because the more people understand how this system actually works, the better equipped we all are to navigate it. And if you want more content that breaks down the confusing, frustrating, and sometimes genuinely maddening world of insurance in plain language, subscribe to this channel. We do this every week because you deserve to understand the systems that affect your life, even the ones that were never designed to be easy to understand.